This is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Jean-Ann Booth, CEO of UnaliWear. UnaliWear's Kanega watch is the only medical alert watch you can wear 24/7 that has fall detection. With the patented quick swap battery system in the band, wearers never have to take the Kanega watch off to charge, and the company's patented real fall technology is literally revolutionizing the world of fall detection and response. Jean-Ann, thank you for joining us.
Oh, thank you so much for having me, Hall.
Great. So where are you calling from today?
I am calling from our factory offices in Austin, Texas.
That's great. So you started UnaliWear. Tell us more about your background before you launched it.
Yeah, sure. So it's actually kind of a long one. I'm an electrical engineer with 30 years in semiconductors, including 2 semiconductor startups. One of those sold to Apple. The other one sold to Texas Instruments. And then, funny enough, after that, I retired and had a great retirement for a couple of years as a dive master on a liveaboard dive boat. And that was absolutely fantastic. But then mom turned 80, and thus UnaliWear was born.
Well, great. So what excites you right now?
You know, for UnaliWear, this has been an interesting journey because we're 10 years old now, and the weekend of our 10-year anniversary was exactly when New York Times' Wirecutter magazine declared UnaliWear's Kanega watch to be the best medical alert on the go. Not one of the best, but the best. So that's pretty dang exciting. You know, something that, when I started this company in 2013, the Apple Watch didn't even exist. And here I am pitching, hey, I'm going to give you a watch that has cellular and Wi-Fi and GPS and Bluetooth for hearing aids and telemedicine devices. And you talk to it and it talks to you, and a patented quick swap battery system in the band. And everybody's going, you're crazy. But here we are now. I guess I'm not crazy.
No, it sounds like you're a pathfinder there in the technology world, getting out ahead of the curve, which what most startups do. And so congratulations on that.
Thank you.
So we have a lot of startup founders that listen to the show, as well as investors. And one thing I noticed is you are always very good about managing investors and your cap table, and wanted to get your advice on how does a startup founder manage their cap table through successive rounds of funding? You've raised a good deal of funding over the years from different groups, but what's your advice there?
Yeah, so the one advantage of having a long career is that I've seen lots of growth and change in the technology that supports serial entrepreneurs as well. I mean, my first semiconductor company, our cap table was an Excel spreadsheet. And let me tell you, that was hard. We don't do that anymore. And for the semiconductor companies, we raised over $100 million in venture capital. So, we're not talking about little money here. UnaliWear has been different. Silvertech, which is what we do, right? Technology for older adults, is not something that VCs tend to play in. And so most of our funding comes from angels and family offices. And so as a result, the cap table has a lot of people on it, a lot of entities, actually. Some people have multiple entities. And so, we use professional tools like Carta to manage the cap table. But even more important than that, when I talk to people who look at the number of angels that we have through the $21 million that we've raised for UnaliWear over the last decade, and they're like, oh my God, that must be horrible, managing all those people. And actually, I disagree completely. It's not hard if you do it right. And what has worked for me is every single month, and I mean every single month, since we got our first funding in September of 2014, I do an investor report for all investors. So it's a one-pager on the business, and then full financials. So, P&L, balance sheet, cash flow. And then as we started selling, there's 3 pages of, key marketing and sales KPIs that go with it. And so every single month, everybody knows what's going on. And the advantage that that brings is that because we're looking in this case as at an angel group, being able to say, you know, being able to create that relationship with everybody because they hear from me every single month, the good times, the bad times, and it allows us to build a relationship and to build trust. The number of times that our angels have come back and kept UnaliWear alive, I mean, I can't even count, right? And the reason they did it, I think, it's not that I'm great. It's not that our technology is great, although the tech is great. But I really think it's because I do that investor report every single month. And so everybody knows what's going on. And so they're not sitting there worrying about whether or not their investment is going to be appropriately managed.
Well, that's great. You're very good about keeping the investors up to date, which has benefits down the road for follow-on funding and support and so forth. How many people are on your cap table right now?
I don't know the number of people because, some entities on the cap table are in SPLLCs, right? Special purpose LLCs. Some angel groups, for instance, will invest as an angel group. Other angel groups, the angels in that group who choose to invest will invest as individuals. And then some individuals invest through multiple funding entities that they may have, right? So they may have a living will trust, and they may have another trust and another. I have one investor who's got 5 trusts on the cap table. So last I counted, there's 165, 175-ish entities on the cap table. But, frankly, I mean, the limit for going public is 300. So we're fine.
Right. Well, you've worked with VCs and angels. How would you contrast and compare working with both of those groups?
They are really, really different. The things that there are a lot of things about VCs that most entrepreneurs don't really understand, and that I didn't understand early on when I was working with VCs. And I think one of the most important is, especially if you're going to be leading in a technology development where it is possible that it could be a decade or more, is understanding the fund structure of VCs. So usually a VC fund is a 10-year entity. And so when a VC invests, you need to be asking as an entrepreneur, when did this fund open and when is its close date? Because you need to be exited by that close date, or they're going to exit you. They'll actually sell the company even if you're not ready, right? That's super, super important to understand. And actually, I didn't set out to fund UnaliWear through angels, but in this particular case, I'm really glad I did. Because if you think about it, a decade ago, the Apple Watch didn't exist, right? So the development that we've done, it's our hardware, our software, our cloud, our AI, is true, full R&D. And it has taken us a decade to get product market fit. But as said by the Wirecutter magazine, we're there. But golly gee, if we had done a VC, we probably wouldn't have gotten here, and we wouldn't be saving the lives we're saving today.
So there are different paths of fundraising. VC is one. I think that's the one people go to just because they have the highest profile, but they're not the best fit for most anyway. Then there's angels. And what are the other different paths you found for fundraising out there?
Sometimes there's kind of different looking at angels, right? Some is angels as individuals, some is angels as angel groups, and then there's family offices. And the hard thing about family offices is, first of all, figuring out who they are. But second of all, they're very, very different, right? And so that big difference between a VC and an angel or a family office is a VC is always investing somebody else's money. Right? And an angel or a family office is investing their own money. And so VCs have, hardline theses. We raised money from the limited partners saying we were going to invest in this, that, and the other technology or space. And that's all they can do by the LP agreement. With an angel or a family office, it's whatever makes sense to them because it's their own money. So that's a different discussion when you're talking about what it is you're doing, because sometimes, especially if there's an impact aspect to what you're doing, like for UnaliWear, right? We're saving lives for independent but vulnerable people. If there's that impact piece, then that may make somebody invest where their reason for investment is they think that this is going to be successful and actually creating the positive impact that they think is important in the world.
And how would you characterize a family office? How are they different from angels?
Oh, goodness. Well, of course, it all depends on the size of the family office, but sometimes the family offices, actually look a lot like VCs. I mean, they're full offices with full-time fund management people and due diligence, assistants and things along those lines. But I think the fundamental of a family office is if you've seen one family office, you've seen one family office. They're super, super different. I mean, I have seen lots of very different family offices.
That's great.
Yeah.
Well, you raised quite a bit of funding, so I think you have probably the best fundraising skills of anyone I know in the startup world. How do you manage the fundraising process? What was your advice or process that you can share with others?
Goodness. I mean, just like cap tables, we have so much better tools now with full CRM. So, pick your favorite CRM and you should be using that. I will admit that in UnaliWear, my expectation actually was that as a successful serial entrepreneur, that I would actually attract VC funding for UnaliWear. And so when I did the first funding through angels, I didn't start with a CRM. And it was pretty far along before I actually finally started putting everything in a CRM. I had all of these sloppy little Excel spreadsheets everywhere with, here's your follow-up action and here's the last time you talked to them and here's what you did. It was an email or a voicemail or whatever. And I don't recommend that strategy. But yeah, you really need to look at it as a full campaign. And you also, just like the investor report that I send every month, if you think that there is an entity that might fund you and it's just not the right time for them, but you think that they're aligned, it's just timing is not right, then you should occasionally just kind of, send them an email. Hey, here's what's going on. By the way, did you hear that New York Times, that kind of thing. So yeah, it truly is a process. And I think, when I talk to newer entrepreneurs, especially who are fundraising from angels, I think they get this perspective that, I'm going to talk to an angel and they're going to write me a check tomorrow. Or I'm going to do a pitch and I'm going to leave with a check. And so let me just give you a little data. So $21 million into UnaliWear. One person wrote me a check at a pitch. One person. Okay. $50K out of $21 million happened in a pitch. So that is not the way it works. So the average angel raise is 4 months from when you pitch the group until you're going to be getting money. So you got to be actually looking at that. And, just like you tell your salespeople, right, ABC, always be closing, you need to always be raising. And so the other suggestion, if you end up doing something that is going to be angel funded, whether you realize that in the beginning or not, the other thing that has worked for UnaliWear is that when I write a new round, it's always a rolling close, not an escrow. Okay, because the timing of each angel group coming in is going to be different, right? And they've all got their own timelines. And so usually I always have a round open. And then when we've hit a new milestone, I close that round, we open a new one, right? So always be raising. That's all I can say.
Good advice. And yes, fundraising is a sales process, and the tools today are much better than they were many years ago. So it's good to see that progress help as well. But let's switch gears and go back to talk more about the silver tech industry where UnaliWear lives. And let's talk about that from the point of view of an investor and a startup. You see lots of startups out there and lots of investors. What's your advice for people investing in startups in the silver tech space?
Oh, goodness gracious. So if you're investing in silver tech, so I have to actually back it up one step. So I don't know, Hall, you probably know off the top of your head, how many trillions of dollars are invested in venture capital, every year? It's a T, I'm pretty sure, right? Or a B,
It's
maybe.
close to that. I think it's down a little bit now from the pandemic, but yeah, it's close to that.
Yeah, so the total amount of money in venture capital dedicated to silver tech is $72 million. That was an M, 72 million. It's three funds, a 20, a 20, and a 32. And so the challenge with that is that means that, if you're listening to Hall's podcast all the time, you understand venture capital math, right? VC math. So the challenge with a 20, a 20, and a 32 is that they can only invest in software. Now, the challenge of being an older adult is the maladies of aging. Can't see, can't hear, can't touch. But other than that, they're perfectly fine. So the challenge of silver tech is really, if you're going to make a difference, you probably have to do a physical product, which means if you do the VC math thing, you probably need a $300 to $500 million venture capital fund. And there aren't lots of those these days, right? We still kind of have this little gap in between, the micro VCs and then, Sand Hill Roads. I don't know. NEA funded my last semiconductor company, and I think now they're funding out of two $6 billion funds. I'm not sure. I don't even keep up anymore. But so the challenge becomes making sure that you are investing in something that you think is actually going to go all the way. And of course, the challenge with a physical product company is that they tend to be very binary. They're either successful or they're not at all. And, one of the reasons VCs love software is that, pretty much everybody will exit for at least a little bit. So you're not as likely to lose everything. And that's not really the case of a physical product company. But again, let's go back to the impact statement. If you think you're backing the right team that has the skills and the tenacity to actually make it happen, if what you want to do is impact silver tech, then it's probably a physical product because it needs to be loud, it needs to be seeable. And what people don't understand is that as seniors age, or as people age, the chemical signal in the back of the brain that says I'm thirsty quits working. And so seniors are chronically dehydrated. And if you add any kind of a mobility challenge to it, then they intentionally make it worse. The consequence of that is that you lack the galvanic skin response that powers touch. So if you've ever seen an older adult with their iPhone or their Android phone, and they're like pressing down on the glass so hard, their fingers all bent back and everything, and people tend to think, oh my God, they just don't get technology. But that's not it. Actually, if they just lick their finger, it'd work fine. But they're dehydrated. And that's why the Kanega watch does speech, not touch. And that's why the display is a bright white on black, because of glaucoma, visual acuity issues, macular degeneration. So it's a different product in the space. So, sorry, I wandered off. But to go back to your question, if you're investing in this space, I think the first thing to remember is to understand what are the challenges of aging and to seriously think about what is it actually that an aging person might look like? Because we have these cultural biases that when we say older adult, you get this mental image. There's this old woman pensively staring out the window, worrying about money, her walker or her cane by her side. Just so you know, there's over 60 million adults above the age of 65 in the United States today. And less than 1% of them are that image that I just created for you. Most of us are entirely active. I'm still an endurance triathlete, and I'm one of those adults, right? So you have to get rid of your biases if you're going to invest in this space as well.
Well, great. That's good advice. And then on the other side of that table, what about startups or founders who are starting silver tech companies? What's your advice to them?
I hope you have a lot of tenacity and the ability to, do the marathon and not the sprint, because it will be a marathon.
Well, I think a lot of people look at the boomers or the people in this category as being wealthy and having a lot of money to spend on things. But what have you found is the reality out there?
Actually, that is the reality. And in fact, it's not just the boomers, right? The 60 plus population in the United States controls 64% of our wealth in the United States. So, I mean, again, we go back to that cultural bias, right? The cultural bias is you're old, therefore you have no money. And that's just not true, right? The other cultural bias is you're old, therefore you won't buy anything. That is just not true. 119 of the 123 consumer purchasing categories are actually dominated by the 60 plus category. 119 of 123, right? Older adults are 24% of the population of the United States today. It is the biggest green field that venture capital is not playing in. And I have one investor friend. She's not invested in UnaliWear, but when I've talked to her about this, she says the reason that VCs won't invest in silver tech is because nobody's made it big in silver tech. Because the assumption is Medicare is going to pay for all of this. And the truth of the matter is Medicare doesn't. They don't pay for this stuff. They're fee for service. And so what I've told her is, given the demographics, given the economics, given the reality that in just a few short years, there are going to be more people above the age of 65 than there are below the age of 18 in the United States, we have to have solutions that allow us to age independently. And so somebody's going to make it big. And my hope for my investors is it's us.
Well, we certainly see that in with therapeutics. You can't watch anything on streaming or television anymore without having at least 3 commercials come up offering a therapeutic for the 60 plus crowd. So it certainly seemed like it's working there. I guess it's just the hardware sector that's a little bit behind as far as it's not as capital efficient. But I'm curious as your thoughts on that. Do you think as more money is there, typically venture capital follows the money. It seemed like they'd be following the money into the space in a bigger way.
Well, I mean, you would think that, but honestly, I think there are a couple of challenges. So the first one is the cultural bias piece, right? So you have to have somebody looking at the economic argument who actually understands, right? Who takes that image of the old woman staring pensively out the window and throws that away and actually looks at the older adults that they know who are active, who are traveling, who are going to the shows, to the operas, to the concerts. I mean, God, have you seen a Pink concert lately? I mean, it's just, it's me and all my peers. But anyway, you have to get rid of that bias. And then the other piece about it is that you have to find something that you're willing to understand from a manufacturing perspective. Again, if you're going to do it in a VC side, you kind of have to have that fund in the right range, and we're just a little shy of that particular range of funds.
I see. Well, in the last minutes that we have here today, what else should we cover that we haven't?
I have one piece of advice from my best friend that through the marathon that has been UnaliWear has really gotten us to where we are as the best medical alert on the go. And so I wanted to share that with everybody. And it's this. It's the question of if you're an entrepreneur or if you're an investor, and the question is, do I keep going? Does this company keep going? Or do I stop now or give up? And the way to answer that is, do I still have paths to go down? So is there another strategic I can talk to? Is there another angel group I can talk to? Is there another VC I can talk to? And if the answer is yes, there's another path to go down, then you're not done.
Well, that's good advice. I appreciate that. So how best for listeners to get back in touch with you?
They can get in touch with me through UnaliWear and our website. So it's UnaliWear.com. And I would also say, I should probably explain where that name comes from because it's not very normal. Unali is Cherokee for friend, and Kanega is Cherokee for speak. So we're the friend who speaks to you. And if you look at the picture of my mom on our website, you can see that my mom, who was a model, you can see our Cherokee heritage in her very well. I'm kind of the spitting image of my dad's sister, but there you go.
Well, great. Well, we'll include that in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Thank you very much for having me, Hall.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.